Hello friends, this is Vijay Bhambwani and I'm back with you again. This time around for a change, I'm shooting this video from my house. You've heard of an old saying, desperate times, desperate measures. This is an emergency recording that I have done after the OPEC meeting in Vienna concluded late Indian time in the night on Friday, 6th December 2019. A historic 500,000 barrel or 5 lakh barrel oil output cut has been delivered by OPEC and non-OPEC members put together. The non-OPEC members are led by the Russians. 3 years ago, Khalid Al-Falih had delivered similar above market expectation output cuts. What happened in 2016 was that oil prices spiked marginally and for a short period of time before coming down again. Are we expecting history to repeat itself? Let's take a look. The Kingdom of Saudi Arabia is likely to curtail its output to 9.7 million barrels of oil per day. The US, on the other hand, pumps 12 million barrels of oil per day. In my opinion, the long-term gainer from this output cut will be United States of America, which is now the big boy of oil producers and, remember, a net oil exporter. The output cut will roughly total about 1.7% output of the entire world. It's not too much and it's not permanent. OPEC will meet again in Vienna in March 2020 and take a relook. So from my point of view, this output cut is likely to last for 3.5 months before it's reviewed again. What does Saudi Arabia need to push oil prices for? Hey, on 11th, that is Wednesday, Saudi Aramco's IPO is getting listed on the Tadawul Stock Exchange in Saudi Arabia itself. The price of 32 riyals per share at which the Saudis have issued the share to the general public is likely to be exceeded upon listing because the Saudis want a $2 trillion valuation for Aramco. Prince Mohammed bin Salman wants to build tourist cities near the Red Sea and the northeastern desert so that Saudi Arabia can wean itself off the oil revenue market and no more depend on fossil fuels alone. The Saudis have also been cutting back on social expenditure. They need to ramp up social welfare spending and surplus, if any, will be invested in the Sovereign Wealth Fund, which will fund other important projects in Saudi Arabia. The problem I have with the output cut is fairly simple. OPEC is hounded by the Shia-Sunni divide. Let us not forget, just before the Aramco IPO was flagged off, the Iranians very coincidentally announced a mega oil discovery, which was supposed to put downward pressure on oil prices, coinciding with the launch of the Aramco IPO. Now, the Iranian and Saudi rivalry, or even let's call it enmity, is well known. It's the stuff legends are made of, right? And the non-OPEC members, particularly Russians, have been violating the OPEC quota for time immemorial. For 10 months now, the Russians have been producing and exporting more than they had agreed to do and thereby harmed OPEC's business interest. The other aspect that I think nobody is talking about in the news media is the worries that I have about the immediate future. If you were to Google search Equinox of Norway, you will realize that they have a giant oil field in Norway called Johan Sverdrup. I talked about this in an earlier video. Johan Sverdrup as an oil well will be pumping 450,000 barrels of oil per day in the next 2 to 3 months itself. So to that extent, OPEC's output cut will be nullified by Johan Sverdrup itself of Equinox company. Wait, there's more. On the border between Saudi Arabia and Kuwait, let's call it no man's land, On the border there are at least 3 giant oil wells which have not been drilled for the simple reason that there is a lack of clarity on the jurisdiction as to who owns the oil. Just before the Aramco issue was launched, the Saudis announced in the international media that the Kuwaitis and the Saudis had reached a diplomatic settlement for exploiting the oil lying in the ground untapped and unused with a production sharing formula. And hold your breath, the collective output of these 3 oil wells will well exceed 500,000 barrels of oil. So in my opinion, the output cut is nothing but a cosmetic announcement at best. Let us not forget that the output cut from 1.2 million barrels of OPEC plus and cutting it by 500,000 barrels, therefore taking the entire output cut to 1.7 million barrels, is already in place since October. This is something that oil analysts and the news media is ignoring or probably not aware of. You, my dear subscriber at Equity Master, now know what is happening. Does my view or the long-term outlook on oil change? Not at all. I think this is a blip on my radar screen. If at all I have missed short selling oil now, I would use rallies or sharp upthrusts, if any, to initiate short positions in oil. My view remains in place, and if there are any updates, I'll be more than happy to come back to you. Before I sign off for today, let me remind you, if you're watching this video on YouTube, please don't forget to click like or subscribe to my channel, and don't forget to share this video with friends and family. In the comment section, do let me know what you think about this video and if there are any other topics you would want me to talk about. Take very good care of your investments. Have a profitable day.